The whispers of a floating Iraqi dinar have sent shockwaves across the investment community. For years, holders of the Iraqi Dinar IQD have been waiting, hoping, and speculating on a possible revaluation RV that could transform their modest currency holdings into life-changing wealth. Now, with talk of Iraq allowing its currency to float on the global market, that dream feels closer than ever. But why does this moment matter? First, it comes after decades of instability where Iraq's currency was crippled by war, sanctions, corruption, and weak governance. The mere fact that global financial circles are discussing a potential float shows that Iraq is finally stepping into a position of economic recovery and international trust. Second, the global context in 2025 is more favorable than before. Oil prices are strong, Iraq's foreign reserves are rising, and the government is actively pursuing reforms that align with international standards. This means Iraq is no longer seen as an unstable outlier, being prepared to rejoin the financial world. And finally, the psychological impact for dinar holders. The phrase currency float signals something far more powerful than just a technical adjustment. It represents the possibility that their patience will finally be rewarded, and that the dinar could rise in value naturally as market forces push it upward. This isn't just about exchange rates. It's about the beginning of a new financial chapter for both Iraq and those who believed in its recovery story. To understand why this news is so huge, we need to break down the concept of a currency float. Most currencies in the world operate under either a fixed exchange rate system or a floating exchange rate system. Fixed rate. The government or central bank sets the currency value and keeps it pegged to another major currency like the US dollar. Iraq currently operates under this system, keeping the dinar at a controlled rate. Floating rate. The currency's value is determined by the supply and demand of the market. If demand increases, the currency strengthens. If demand falls, the currency weakens. So when we hear that Iraq may move toward a float, it means the country could allow the IQD to trade freely on the global Forex market, where investors, traders, and banks would decide its value based on Iraq's economic strength. Why is this powerful? Because Iraq is an oil-rich nation with massive untapped potential. If global confidence rises, demand for dinars could surge naturally, increasing its value. Unlike a one-time revaluation set by decree, a float creates a continuous upward trend, giving investors hope for long-term growth. Why investors are excited a float means instant trade. Investors could buy and sell dinars on major platforms instead of holding paper notes. It creates the possibility of rapid appreciation if Iraq's fundamentals oil. Infrastructure reserves attract global money. It signals that the Iraqi government is serious about modernizing its economy and breaking free from artificial controls. This is why the words Iraqi dinar and float in the same sentence have electrified investors. It could be the long-awaited green light that changes the game entirely. To understand why the possibility of a float has ignited so much excitement, we must look back at the roller coaster history of the Iraqi dinar. Once upon a time, the Iraqi dinar was a currency of real strength. In the 1970s and early 1980s, before wars and sanctions, one IQD was worth over $3 United States. Iraq was considered one of the most powerful economies in the Middle East, backed by vast oil reserves, strong exports, and regional influence. For Iraqis, their currency was a symbol of pride and prosperity. But history took a darker turn. The Iran-Iraq War, the Gulf War, and later international sanctions crushed the country's economy. By the early 2000s, Iraq was reeling under hyperinflation and economic collapse. Old notes were replaced, the dinar was redenominated, and its value fell to fractions of a cent compared to the dollar. What was once a respected currency became one of the weakest in the world. Despite this, the dream of a comeback never died. When the US-led coalition overthrew Saddam Hussein in 2003, investors around the world began speculating that Iraq's massive oil wealth would one day push the dinar back to strength. Dinar investment forums popped up, and countless holders began collecting notes, waiting for the day the RV revaluation would arrive. Fast forward to today. Iraq has a new constitution, stronger political ties, increasing oil exports, and growing reserves at the Central Bank of Iraq. For the first time in decades, the pieces are falling into place for a rebirth of the dinar. The float alert, ISNT, just financial news. It feels like the beginning of that long-awaited redemption story. A currency that once symbolized Iraq's fall could soon symbolize its rise to global relevance. Here's the golden question. Why would a float make the dinar surge? The answer lies in the mechanics of a free market. Under the current fixed system, the dinar is pegged at around 1,300 to 1,400 IQD per US dollar. The Central Bank of Iraq sets this rate and defends it by controlling supply. But under a float, Iraq would step back and let global demand dictate the value. Now consider Iraq's unique position. It has the 5th largest oil reserves in the world. Global energy demand is strong, and oil remains the backbone of international trade. Iraq's rebuilding efforts mean billions in contracts, infrastructure projects, and foreign investments are flowing in. The government is actively pushing reforms to attract international trust. All of this means one thing: more demand for Iraqi dinars. Foreign investors need IQD to do business in Iraq. Energy companies need IQD to pay local costs. If the dinar floats, the market could quickly push its value upward because more people want to hold and trade it. A potential domino effect once the dinar floats and begins rising. Speculators and traders around the world will notice. This could cause a rush of buying pressure, creating a self-reinforcing cycle of appreciation. Imagine the headlines. Iraqi Dinar, up 20% in first week of float. Investors pour into IQD amid surging value. Such news could turn the dinar from a niche speculative play into a mainstream Forex story, attracting even more demand. Currency floats don't happen often, especially for nations rich in resources but underutilized in global finance. Iraq is in a position where its fundamentals are stronger than its exchange rate reflects. If it floats, the dinar has the chance to correct years of undervaluation, and that's exactly what excites investors. The float could be the spark that ignites the long-awaited surge in IQD value, rewarding patient holders who never lost faith. Financial experts and investors are closely watching Iraq as talk of a possible dinar float gains traction. Analysts suggest Iraq could adopt a managed float, keeping the currency stable while allowing gradual appreciation. Some predictions point to 750 IQD per USD as an early target rate. Meanwhile, banks inside and outside Iraq are reportedly upgrading systems, signaling preparation for a major currency shift. The news has electrified the global investor community. For years, dinar holders waited patiently, and now the possibility of a float is being treated as a turning point. The IQD, long undervalued, could become a highly attractive Forex asset, offering both short-term trading opportunities and long-term appreciation potential. Iraq's banking sector is rapidly modernizing, introducing digital payment systems, expanding access to international transactions, and strengthening financial oversight. This aligns with the vision of creating a strong currency backed by strong infrastructure. Yes, volatility is expected if the float begins, but for many, the risk-reward balance feels favorable. The idea of entering the market before a major revaluation or float motivates investors worldwide. Beyond speculation, a stronger dinar could attract global investment, boost regional trade, and uplift Iraq's economy. For citizens, it promises more purchasing power and stability. For investors, it represents a chance to be part of a nation's financial comeback story.